Alright, let's take just a few minutes to pull back the curtain on one of the most powerful and honestly most misunderstood forces in the world, the stock market. We're going to cut through all the jargon and confusion and get to how it really works. When you picture the stock market, I bet this is what comes to mind, right? Just this absolute chaos of blinking lights and people yelling. It feels super complicated, really intimidating, almost like it's designed to keep normal people out. But what if you could just strip all of that noise away? What's the actual machine humming underneath all of that? Well, that's the big question we're going to answer right now. And trust me, it's going to be way simpler than you think. So here's our game plan. We're going to start with the absolute basics. What even is a stock? Then we'll get into what makes prices go up and down, who's actually doing the trading, and the huge battle between emotion and logic. And finally, we'll talk about how you can actually profit. And maybe most importantly, we'll bust the biggest myth out there. Okay, first things first, what in the world is a stock? It is the fundamental building block of this entire universe. And honestly, the idea is incredibly simple. At its heart, a stock is nothing more than a tiny, tiny piece of ownership in a company. That's it. Think of the stock market as just a giant store where instead of buying groceries, you're buying and selling these little ownership slices of actual businesses. And this right here is the most important distinction to make. Buying a stock isn't like playing the lottery. It's not some random bet. You are literally becoming a part owner of a real company with real buildings, real employees, and real products. So you might be wondering, why would a company sell off pieces of itself? Well, it's all about raising money, or what they call capital. They sell these shares to people like us so they can get the cash to grow, to build a new factory, invent some new tech, or expand into new countries. That first big sale is what's known as an IPO, an initial public offering. Okay, so if stocks are just little pieces of companies, what makes their prices fly up and dive down all day long? Let's pop the hood and look at the engine that drives this whole thing. The first thing we get is that these price movements are not random. It might look like it, but it's not. The whole thing boils down to one of the oldest, simplest ideas in economics. And that principle is simply supply and demand. If a ton of people are trying to buy a stock and not many people are selling it, guess what? The price gets pushed up. And if everyone's trying to sell and nobody wants to buy, the price falls. It's basically one giant continuous auction. So what makes people want to buy or sell? All sorts of real-world stuff. Did the company just have a great quarter? Is there good news about the economy? What are interest rates doing? And yeah, a huge part of it is just raw human emotion. Things like fear and greed have a massive impact on the balance of supply and demand. So we've got the what and the why. Now let's talk about the who and the where. Who are all these people and institutions doing the buying and selling? And where does it all actually happen? The market's made up of a few different groups. You've got retail investors. Hey, that's people like you and me. Then you have the big dogs, institutional investors. These are the huge banks, pension funds, the ones managing billions. And then you have specialists like market makers and traders who are kind of like the plumbing of the system, making sure everything flows smoothly. And all of these different players meet up to do business in these huge, organized marketplaces called stock exchanges. You've definitely heard of them, like the New York Stock Exchange or the NASDAQ. The actual mechanics of a trade are kind of mind-blowing. When you click buy on your phone, that order zips off to an exchange. A computer there instantly finds someone who wants to sell at that price, connects you to, and the whole deal is done literally in milliseconds. It's like a super fast matchmaking service for money. So the system itself is incredibly logical. It's efficient, it's all ones and zeros. So why does the market feel so emotional and unpredictable sometimes? That brings us to the biggest wild card in the whole game. Us, the human element. The trading system is a machine, but it's run by millions of humans. And humans, we feel things. Fear can trigger a massive sell-off just because of one bad headline. And on the flip side, greed, or FOMO, fear of missing out, can pump a stock's price up way beyond what it's actually worth. This human factor is what creates almost all of the day-to-day noise. And this is absolutely crucial to understand. If you zoom in and look at the market day to day, yeah, it looks totally chaotic. It's just bouncing all over the place based on news and feelings. But if you zoom out and look at the market over years or decades, all that noise fades away. What you see then is a line that generally goes up, reflecting the real growth of the companies in it. Okay, so this brings us to the million-dollar question, right? If you own this tiny piece of a company, how does that turn into actual money in your pocket? Well, there are really two main ways it happens. First up, there's capital gains. This is the one everybody knows. You buy a stock for $10 a share, the company does well, and later you sell it for 15. That $5 difference is your profit. The second way is through dividends. This is pretty cool. When a company makes a profit, they might decide to share a slice of that profit directly with their owners. With you. They just send you a cash payment. And that brings us to our final and maybe most important point. We've got to talk about the single biggest and most dangerous misconception people have about the stock market. It's the one idea that gets so many people into trouble. I love this quote because it just nails it. The stock market is not a get-rich-quick scheme. No way. In fact, it's pretty much the opposite. It's a place where people who are impulsive and impatient often end up losing their money to people who are disciplined and patient. Because at the end of the day, success here isn't about getting lucky. It's about building the right mindset. The market rewards discipline, having a plan and sticking to it. It rewards knowledge, actually understanding what it is you own. And more than anything, it rewards long-term thinking. So if you take one thing away from all this, let it be this. The stock market is not a casino. It's not a guessing game. Over the long run, it's a reflection of human innovation and progress. It's the engine of our economy. And when you start to see it that way, well, everything changes.